the listed real estate trusts, which is the biggest part of the market, but also the private sector were borrowing quite heavily and often borrowing against assets that were of a lower quality. So what it was doing is creating a greater risk for those investors. We saw the Australian real estate market, you know, your big listed trusts start to buy foreign assets, so offshore in Japan and in America, and structuring those returns so that if you were here in Australia getting an 8% yield on your investment, often that actual building that fund owned, so you had a portfolio of Japanese offices, Tokyo office blocks, were often only producing a 4% yield. The rest of your 8% yield is artificial structuring. So this all culminated with the collapse of Centro, and we saw then a rush to recapitalise those vehicles. So people that have been invested in the listed real estate sector would have seen a need to either double their investment to not get diluted or to get a lower return on their investment and have a lower holding. So it's created a lot of changes, in particular the way in which it's funded. So there's a greater need for equity and there's less debt available for the sector. So it's meant that there's a flight to quality by the banks. So they're saying, we'll happily lend to Westfield or lend lease, but the smaller operators in the market, which actually makes up the biggest component of the market, are still starved for capital. Okay, the impact of the GFC on the property development industry. So we've got a focus today on development and residential, but in general, this is a sector-wide changes that have occurred. In particular, so the credit crunch has meant there's less capital available for the entire sector, in particular residential and subsectors. Now, the tourism, lifestyle and luxury end of the markets have been impacted the most. You've seen the Gold Coast being the pin-up boy of that. Obviously, you know, $2 million apartments on the Gold Coast have come down in value, but what we've seen is it's not the low end of the market, so your $500,000 rental apartments are not being impacted. They're still occupied, rents are growing, and in most cases, property prices have remained very stable, have actually increased.